Yeah. It's been long coming, this one, now.
Yeah.
Yeah, we've been having a conversation about this for, I think, for the past 2 years now.
Mm, Great.
Welcome to it, Sanbonan. We're talking about very important stuff. We're talking about money, financial education, especially for people who are in an entry level profession, just finished university, or you just got your first job, and you're considering maybe getting yourself involved in these loan applications, vehicle applications, and actually financing isn't a fun anymore. Mudau, give over to them.
Inda, Varmini and Wadau. So today I'll be chilling with one guy that I respect so much, who has been a good friend, someone that I learn a lot from. So I hope you are going to learn a lot from this powerful man. I call him Buffalo.
Yeah, Marosar powerful man who can read no correct. You're coming with some church tendencies.
No. It has
You're
nothing to
coming with
do
some
with
church tendencies.
it has
Yeah.
nothing to do with religion or Christianity of some sort. But we are going to talk things like how to buy a car and all of those things, interest rate, money matters. So yeah, we're going to talk about money and then how to tackle some other loan applications, interest rate. So you're going to learn a lot from this conversation that we're going to have. This is just a normal conversation. It's not a formal podcast and whatsoever. But we are going that direction. Yeah. Thank you, my man, for this city.
Yeah. Now, let's start maybe, for example, um, for someone who actually doesn't have maybe a lot of exposure about the importance of a good credit score. What are the benefits of having the good credit score when maybe you're going to actually get involved in maybe applying for whatever finance that you might need? Before we go deeper, maybe to serious things like Bikoloi, let's just talk like the importance of a good credit score. How do you build up a good credit score? What are the benefits of actually having a good credit score? And also, what are the disadvantages of actually messing up your credit score?
Okay. When you're talking about credit score, credit score, we are talking about your credit profile. Credit score is one thing that is very much sensitive, like your medical health. It's something that you cannot just disclose to anyone. We treat it like that because it's something that gives a profile on how you handle your monies, on how you pay your debts. So credit score is very much important. Very much important. Uh, let's talk about a good credit score. A good credit score, we are looking at something around about 650 to 660 and above. Anything less than that, it's a bad credit profile.
650 to
Yeah,
650.
650 and above.
It's a
If
good
you are on,
credit
yeah,
score.
it's a good credit score. So it gives you a great opportunity to get a lower interest rate. So the banks, what they do, they check your credit profile, credit payment history. How do you pay your debts? You pay your debts on time? Are you paying extra? That is what they check on the credit score. And there is this one thing that I've learned. They call it a credit limit. With your credit score, they can tell or you can afford to get this loan. This how much loan. For example, you can be able to get 120. So what you can do, if you afford to get 120, you don't take a loan for 120. You take a loan for 50,000. But as soon as you take the loan for 120, which means you have reached your credit limit, and it affects your credit score because it shows the desperation for money or the desperation for that loan. You take a loan for 50,000, but you afford to take a loan for 120. Then you pay that 50,000 on time. It will increase your credit score rapidly. So,
Yeah.
but if you take 120, it shows the desperation for money or for that loan. You see, so that is how I understand the credit score.
And also, I saw like on this like credit bureaus sometimes adding to what you're saying there of the credit limit. Sometimes, for example, when you go and check your credit score, they will show that maybe you applied for a credit card which had 100,000, and they also check like the credit utilization
Yes.
to say on that 100,000 that you have taken, you've actually used the entire 100,000. Does
Yes.
that affect your credit score?
Yes, it does. It does big time. You don't go beyond your credit limit.
In actual fact, you need to be actually responsible, or maybe whatever that you have taken in a journey of building up your good credit score,
Yes.
so that maybe when you go and apply for things like a car, you can actually maybe negotiate like
Best
like good
interest rate.
interest rate.
Yeah.
It's good actually, or it's best in those smaller nyana credit card applications or loan applications to actually like be responsible in terms of how much do you borrow,
Yes.
how you pay it, and how you use it.
Yes. Very much important.
Nah.
Very much important. The credit score is very much important. You need to build your credit score. You don't have to rush. Good people don't rush. If your credit score is bad, it's sitting at 620. According to me, you don't have to go for any loan. You need to better your credit score up until 650 and above. If it's below 650, you are not going to get a good interest rate. So make sure that you better your credit score on time. You work on your credit score. You pay your debts on time. There is this one thing that I've learned from this Clear Score app. Ne? So I normally hear people saying that your debt lasts for 3 years. Yes, that's true. Ne? But your credit report or your credit profile, any missed payment is going to last there for 7 years. Any missed payment. If you have missed a payment from any contract whatsoever, cell phone contract, clothing contract whatsoever, it's going to last there for full 7 years.
Now the thing is, like for example, if you go and take whatever credit that you take, and then you decide to default or not to pay,
Yeah.
that debt actually will prescribe after 3 years.
Yes, that's true. That's true.
But that information, as you say, will stay there on the bureaus for 7 years.
For 7 years. The only way to remove that information, it's paying your debt, that very same debt or that very same credit, and close the account and send them in information that you have closed the account. Then they will send you a clearance letter that shows that this debt has been paid off. It's okay. Everything is well. Yeah, you are done with this credit.
Now, here am I with a good credit score, good credit utilization, good credit limit that shows that I'm responsible, man, when it comes to these things of actually using money or money utilization. And I'm at the point at the moment where, like, for example, let's just say maybe after deduction I get something like 20,000.
Yes.
Now I'm in a position where, like, hey man, you know what, I'm shopping around and I feel like now it's time. I need to actually maybe get some wheels for myself.
Yeah.
Now let's talk like before we get into that, I just want to know, like, or I just want to discuss with you, like, is it a good idea to actually like have some money that I've saved up, maybe to deposit the car, or maybe I can actually maybe go and take the car without depositing the car,
Yeah.
or maybe I can go and take a loan and then deposit the car.
Okay.
So what's your take on that? To say, hey Muna, here am I. I want to buy a car. Do I actually do myself a favor by saving up some money which I can use to deposit the car? And what are my benefits if I do that? And what is the difference of buying a car with no deposit and buying a car with a deposit?
Okay. Hey, the issue of deposit, my man, it sparks a huge debate.
Nah.
Yeah, it's a serious one, this one.
Yeah,
because
yeah,
there
yeah.
is too much information out there. Some will say don't pay the deposit before. Some they say take the car and pay the deposit after 3 months or after a year or after 2 years, or after some couple of months.
But now if like maybe I take the vehicle through a bank finance, and then I can actually go back later on to also pay a deposit.
Yes.
Does that reduce my interest?
It only reduces your principal debt, not the interest.
What is the principal debt?
The principal debt is the
Yeah, Pela, you need to
cost.
take us step by step, because now if we're going to say principal debt to someone who doesn't know a principal debt, Pela, principal debt now it means like you're talking about the head. What is the principal debt?
The principal debt is the price of the car plus all the dealership fitted extras, plus VAT, plus everything, actually.
Total cost
Interest rate,
included.
yes. The total cost of the car, plus dealership fitted extras, delivery, licensing and registration administration fee, that's the total debt, which means that is the amount that you are owing to the bank.
Yeah, going back now to
The deposit.
your trail of thoughts,
Yes.
you were talking about paying the deposit later on, that it reduces the principal debt.
Okay. Paying the deposit before, it reduces the price of the car. It reduces the price of the car. That's the main important goal. It reduces the price of the car. Now, and also it puts you in a better position for a lower interest on that principal debt.
Okay.
Yes. Now, I would advise someone to pay the deposit before. Why? Instead, the car costs 300,000. You have a deposit of 100,000. So which means now you are going to buy the car for how much? For 200,000. Which means the interest will be calculated on what? On 200,000 instead of 300,000.
Yeah.
You see the point?
Yeah?
Then you get someone who takes the car without the deposit, and then is charged the interest on that 300,000, and later on you will come and pay the deposit of 100,000. The interest has already been added on that 300,000, has already been charged on that 300,000. You see, it's great to pay the deposit before. Just that people, they don't know how to do it when they're buying the car. This is how to do it. You do the application, and then after the bank has approved you, or your principal debt or the debt of this car, it's 300,000, and all the dealership fitted extras is this and that and that and that. This is how you do it. You have been approved. You can see that the delivery is 3,000, the licensing is 3,000, the mag rim is 2.5, the sunroof is 14,000, and all of those things. No?
Yeah.
So now, what you do with that 100,000, you ask them to pay them cash, those dealership fitted extras, your sunroof, your mag rims, or whatsoever dealership fitted extras, and also the licensing and registration. You pay them cash with that deposit. The remaining balance you pay towards the price of the car. So which means you'll be left with maybe 175
To deal with.
Yes, to deal with. So you will be charged interest on 175 instead of 300,000. So paying the deposit before, it's great. Just that you need to know how to do it.
So in other words, like maybe it might also be advisable to actually, like, maybe before I buy a car, try to save some money. Maybe Leona, it will show that I will be able to actually afford the car.
Yeah.
Maybe save some money, and then upon like applying for the vehicle finance, then I pay the deposit.
The deposit.
Now, also another thing that I want to ask. Here is a car, like for example, let's just say this car, the installment of the car maybe is 5,500.
Yeah.
And maybe let's just say the car is 400,000. If, for example, I have a deposit maybe of 10% or more, putting that deposit or paying that deposit towards that vehicle finance application, does that reduce my monthly installment?
Yes, it does. It does big time. Big time.
So it's possible that we can actually drive the same car that you took without a deposit, and I pay the deposit, and I'm paying less than what you are paying.
Yes, it's 100% possible.
So it's this thing of actually paying for a deposit.
It's a great move.
It's a great.
Yeah, it's a great move. They mustn't live too.
So when I, like, as I've said to say, Emuna, here am I with a net salary of 20,000 at the moment. What would be your advice to say, Emuna, I need to buy a car? I have a net salary of 20,000.
A net salary of 20,000. Remember, the issue of buying a car, it boils down to the issue of affordability.
Yeah.
Remember, our financial commitments are not the same. I might be earning 20,000 and you earning 20,000, but financially, our commitments are not the same.
Okay, let's say my discretion income after all the costs of all those commitments that I have.
Yes.
Let's just say from that 20,000, I'm left with something like 9,000. Would you advise me to actually go and buy a car?
No.
Okay, let's just say then I'm left with 15,000.
Yeah, if you're left with 15,000, we're looking at 5,000 for a car, and plus 1.2 with 6.2.
And I want to buy, for example, maybe a Toyota Starlet.
A Toyota Starlet, yes, you can afford a Toyota Starlet. But remember, cars are expensive.
And another thing that I wanted us to discuss here, which is something that I'm actually looking here, and we did actually have a conversation about it later on, which I think maybe is something that you need to actually dive into it as well. Like, for example, I'm driving a Polo 1.4, which will need me to actually like pour some petrol now and then to actually
Keep the car
travel
moving.
around
Yeah.
with my car. And that on its own is not the cost that has been added to
Yes.
the vehicle application or insurance or whatever is not added to that.
Yes.
So whatever that I'm paying as a monthly installment to that car included insurance and track.
Yeah.
But now
There's the issue of fuel.
the issue of fuel. Now I see here to say, if for example I'm driving a Polo Vivo 1.4 and I maybe buy petrol 95 unleaded, which is around what, 21 rand 63 cents.
Yeah. Somewhere there, 22 rand. Let's just say 22 rand.
And now here the information that I get here is that if I drive for maybe 15,000 kilometers with the calculations that are here, petrol alone would have cost me 18,673.
Okay. Every 15,000 kilometers that you drive,
Yes.
which is probably almost 6 months to 8 months.
And those are the costs that maybe you may maybe say that you need to actually like take into consideration when you're going to actually buy.
There's
a car.
actually a lot, my man, not fuel only.
So
There's
cars are expensive, most Mudam.
very much expensive, my man. Very much expensive. That is why when you buy a car, put your emotions aside, né? And push your likes and your emotions, or oh, this car is beautiful, look at this rims, look at this seat cover, whatsoever, the IQ light. Hey, there's a lot that you need to consider.
Oh, don't say that.
I'm telling you,
don't say that.
Number one, you should also consider.
So you're telling me that as well? There are people that have bought cars and are regretting that.
Yes.
I'm down.
I'm getting a lot of inbox, man.
Don't say
People are
that.
telling me, or I'm not happy with this car. It's very much expensive to pay for this car. And remember, there is the issue of insurance that you need to put into consideration.
Yeah.
Make a code before you go and buy that car. People are not making a code. They are not doing their research.
Making a code would be like shopping around.
Yes, shopping around for insurance, or okay, for this Hyundai Avenue venue, I'm going to pay 1.8 or 1.9 insurance. Yes, those are
wait, hold your thoughts right there. Another thing that maybe I want to actually ask is, you have maybe your driver's license that you actually maybe managed to get
come this side.
3 years ago. 3 years ago. And I have my driver's license that I've been using for the past 10 years. We're buying the very same car model. Let's just say 2025 Polo TSI.
Yes.
The premiums of the insurance for us, is it going to be the same?
No, it's not going to be
It's
the
based
same.
on?
There's actually a lot of things that the insurance check in terms of giving you a code, né? In terms of the premium. They check the address, they check the
like where you stay.
They also check the lifespan of that license disc. They also check the age. Are you married? There's a lot of things that the insurance consider before they give you.
They don't want to lose out.
Yeah, for someone who is 50, is not going to pay the same premium as someone who is 25.
So someone who's 50 might pay like less premiums compared to someone
because
the one who's 25 is more risky.
It's more risky.
He's speeding.
He's speeding a lot. He's going around.
He drives while you're up.
He's going for road trips. He's going for late night clubs whatsoever with friends. So for someone who's 50, they know this, especially when you are married, your insurance is going to be less. They consider you as a very responsible person, a family orientated person.
Yeah.
Yes. So that is why those things they check, the insurance they check for those things. We can be driving the same car, but the premium is not the same. The premium is not the same. It's gonna be the same. They also check the age factor. How long have you been driving? How old is your license? There's a lot actually. Do you have the garage or you don't have the garage? I might have the garage, you don't have the garage. So the insurance is going to charge you more.
Now, let's dive deeper now. Let's talk um, costs that are associated with actually going to buy a car. What is it that you need to be aware of to say, I'm going to buy a car?
Yeah.
Like, I mean, like in terms of maybe the VAT, the price of a car,
Yes.
and also maybe I don't know if they have service fees and
Yes.
initiation fees and
Yes.
delivery fees.
Yes.
In actual fact, what is it that one should actually be aware of when to say I'm going to apply for a vehicle finance? What are the costs that are associated with just getting that car? Not the monthly installments, the
Yes.
total cost of just getting that car to your name.
Okay. There's a lot of things that one should consider before buying a car, my man. Some have already addressed them. Ne?
Mm-mm.
One most important factor is the interest rate. It's your affordability. Affordability, I'm talking about the monthly installment. One thing that people they look down on it is the price of the car. Only about where they don't do a research. Ne?
Yeah, yeah.
You find someone buying a demo or a used car for a price of a brand new car, but this person doesn't know. How can you shop around for a car but you don't know the brand new price of that car?
Mm,
You get my point? Eh?
yeah, yeah, yeah.
Someone goes to Auto Trader, okay, Polo, DSG, Life 2024. Ne?
Mm,
Maybe it goes for 370 or 350 for 26,000 kilometers. But the brand new car, it's going for 320.
mm.
Yes, you get my point. Eh?
Yeah, yeah,
For
yeah.
320, but you got it on the trader for 350, and it's a used, it's a demo. Man. Make sure that you know the price of a brand new car before you buy that used car. It must make sense. It must make sense to you. The difference must make sense. I hope I'm making sense.
Mm, mm.
So the price of the car, interest rate, affordability. I'm talking about the monthly installment, and also the insurance. Before you buy the car, make sure that you shop around for an insurance before you buy that car. You know exactly what you are getting yourself into.
So, like, if maybe I have to shop around for insurance before I get the car,
Yes.
how do I do that? Like, where do I go to, and
Okay.
what do I say?
You just search on online on Google, maybe an insurance company whatsoever. You know that. Just search there. Okay, they give you a call. You ask them to make a quote for you for a Polo TSI
Mm-hmm,
2025. They will
mm-hmm.
give you a quote.
Then you
They will
can.
ask you address, age, not registration, the license, how old is your license, where are you working, so sort of those things, ne?
Mm,
And then they will give you a quote how much it will cost you. Then you will know exactly. Oh, okay. Actually, this thing costs 1.5 to insure for this car. So
mm-hmm.
those are things that you should also consider. And also the service. There's actually a lot that goes into making a decision to buy a car. Know exactly how much is it going to cost you to service that
So
machine.
it shouldn't be an emotional
It
decision.
shouldn't. It shouldn't. In this nowadays, it shouldn't. It shouldn't. You shouldn't buy a car because of it's beautiful, it's shiny. Hey, what the IQ like? Hey, you'll get yourself into deep financial mess. I'm telling you.
Right. I want to actually maybe try and get your insight on something here.
Mm.
But I just want to use something that maybe I'm giving you two options and you're telling me
Yeah,
which one would you go for and why.
yeah.
Between a Polo Vivo 1.4 Comfort Line
Yeah.
and a Suzuki Swift 1.2 GL, which one would you go for? Entry level cars. Polo 1.4 Comfort Line and a Suzuki Swift 1.2 GL.
For style polo.
Let's leave the style because the style is a case of that put people into mess. And also, I think another thing when it comes to polos,
Mm,
I think the insurance on polo, I don't know, I stand to be corrected, but you can tell me because of you know better.
mm.
But I think the insurance on polo is much more expensive because of
Is the high
it being,
risk. It's
yeah,
a high risk car.
it's a high risk
Yeah, it's a
car.
high risk car.
So between Polo Vivo 1.4
Mm.
and this Suzuki, you would actually go for a Polo Vivo.
I would actually go for a Polo Vivo because it has been there for quite some time from Golf 1. The VW from Golf 1, my man, it has been there. It is time tested, this thing. It has been there. They're still moving around. Now, you know how do I
But
judge
now,
cars?
but
No?
now,
Mm.
eish, bro.
That's how I judge cars. Nah.
Yeah, yeah, yeah.
Okay, looking at Toyota, talking about 16 valve, they still moving.
Yeah, true,
You see?
true. Yeah.
So it shows already I can put money on this thing, on this new Corolla whatsoever prestige nowadays. Even the Polo, you check Golf Mark 1, it's still there. It's still running,
So
my
the
man.
brand has actually built reputation to say
Yes,
we can build cars
it's
that
time
can go
tested.
for a long time.
Yes, it's time tested. You can see this thing can last you another 20 years or 30 years if you take care of it.
Now let's leave the style price, the style, the style option.
Yeah,
You would still go for a Polo Vivo in
I'll
terms
still
of
go for it.
costs.
Yeah, in
Okay.
terms of maintenance, it's cheap. Yes, I know where I can go. I can stuck anywhere in the world. I'll get my car fixed.
Yeah.
Yeah, without even breaking my pocket or whatsoever. Yes.
And then between a Toyota Starlet 1.5 XI and Suzuki Baleno 1.5 GA.
Okay. On that note, ne?
Yeah.
Suzuki.
On that note,
On that note, my
go
friend,
deep, go deep, bruh. Yeah.
because of the automotive industry, the direction that they are taking nowadays, Suzuki and Toyota, they have a partnership.
Yeah, yeah, yeah.
Those cars, they are built in the same plant.
Yeah, they even look the
Yes, they
same.
look the same. Everything is the same there. But looking at the Toyota Starlet and the balloon, the price difference is crazy. The price of a balloon is cheap, and it comes with more extras at no cost. They have electric windows, they have rear camera, and then when looking at the Starlet, some of the Starlet they don't have those things, but the price is it's high. You know why we are buying that car costly as it is? It's because of the brand Toyota. We know as soon as you talk about Toyota, you know the longevity.
But that's what I wanted to say. That one we cannot dispute. Toyota can actually go for a very long time.
Yes, that's true.
And it's not a car that will actually like put you in a position where, like, you don't know what. Like for example, amateurs. You can drive that car for a very long time.
For a very long time.
And he's still driving even now.
Even today.
And if you're someone who can take a good care of it, bro, you can drive that car for a very long time.
For a very long time, my man. So I'll choose Baleno. I'll choose Baleno because it comes with a lot of extras at a lower cost. But the Starlet, man, you know, with Toyota, Toyota, we only like the issue of reliability. It can outlive you and your grandchildren. It will last long, but it doesn't have style. The Toyota is used for Uber. It's used
so you will go for a Toyota?
Government, institution. Yeah, I would go for Baleno nowadays. I'd go for Baleno.
Okay.
Yeah.
Okay. Yeah, I see. So here I see that, like for example, if you go for a Toyota Starlet 1.5, it has a 3-year, 100-kilometer warranty.
Okay.
But the Suzuki Baleno, there's a 5-year, 200-kilometer warranty.
Okay. Can you repeat that?
The Toyota Starlet, it has a 3-year, 100-kilometer warranty.
Okay.
But the Suzuki Baleno has a 5-year, 200-kilometer warranty.
Yeah, those are the things that you should consider before you choose between Baleno and Starlet.
So I'm on the safe side if I'm actually driving a Suzuki Baleno.
Yes, you are on the safe side.
Why do you
Suzuki
think
has been there, man? Has been there.
And let's be honest.
Yeah.
Let's be honest. That Suzuki Baleno is beautiful.
It's beautiful. It's beautiful.
It's nice.
Beautiful car.
It's nice. Yeah.
It's a very beautiful car. That Suzuki Baleno is a very beautiful car, and it comes at a lower cost compared to the Toyota Starlet. The Toyota Starlet, you just buying
like when you're driving it, it feels the same as if you're driving a Toyota.
Yes.
Even the difference is just Suzuki and
the difference is just the badge there. Everything is the same. The difference is just the badge. Everything is the same there. Even the interior, everything is the same.
Now let's talk Kia Picanto and Grand i10.
Kia Picanto. When I was doing my research last time, I think Hyundai, it has 7 years warranty, what. It's 5 years plus 2 years extended warranty, what. So I would go with Hyundai because of that.
Yeah.
Yeah, it has 7 years, something like 7 years warranty.
And
Full
also
7 years. Imagine full
and
7 years.
also like to tell the truth. But also Kia has that. But the Hyundai, bro, the interior,
Yeah,
the comfort of that
yeah,
of the Grand i10, that car drives well.
yeah. That car, it's a beautiful car. In terms of the handling, the style inside, the interior look, it's a beautiful car. But now with the Kia,
Mm,
the only thing that I don't like about the Kia is the issue of the pricing. The pricing must make sense, man. I can't be paying 6,000 for a Kia Picanto.
mm.
No, I can't. I can't, man. Have you seen the boot space of a Kia Picanto? You can only put one bag, man. Imagine if you're going for a road
Bro,
trip
we have people
to
who are
put.
watching here who are driving a Kia Picanto. What's wrong?
Look
What's
at
wrong?
look at that Kia Picanto, man. You can see.
But the comfort inside that car, it's
Yes,
nice, bro.
but I can't be paying 6,000 for that car, man.
Yeah, I hear you.
Let's be
It's not a good financial
let's be
decision.
honest.
Yeah,
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 it's
yeah.
not. It's
It's not
not.
a good financial decision.
But there is someone who is very happy with that smaller nyana car, with that boot space, that smaller boot space for that
Yeah,
6,000.
like for example, it
Remember,
might be someone who just maybe
yes,
graduated or on their
yeah,
entry level
and
job, they don't have a kid,
they don't have to
they
travel
can
to,
buy that car.
yeah, they don't have to travel 200 kilometers.
Now let's talk now like the issues of delivery options and costs.
Yeah,
Um, um, like maybe a dealership pickup, local or home delivery,
mm,
or nationwide or interprovincial delivery.
yeah.
What are the costs that are associated with that?
There is a standard fee that every dealership charges.
The standard fee
Yeah,
might be how
there's
much?
we're looking at 3.5 and above. Some they go to an extent of charging boom 7,000,
Now let's talk like
9,000.
interprovincial.
Yeah, we're talking there this way.
So it's going to be standard even
Yeah,
with.
I think in terms of delivering in another province, maybe from Gauteng to Polokwane, they only pour petrol. Remember the delivery, ne?
Mm.
It depends on unaga delivery fee.
Yeah, yeah, yeah.
There is a delivery at tow truck.
Which might
That
be
yeah,
expensive.
that one is very much
Yeah,
expensive.
yeah.
Then there is a delivery whereby the salesperson drives the car to your home.
Mm-hmm.
Yes. So that one is less because the dealership just pour the petrol to take the car to your place.
And then if maybe like I decide to say no, it's fine, I'm going to collect the car.
Okay, on that note, that is very much important to emphasize. Ne?
Yeah.
Delivery doesn't only apply the issue of you going and collecting the car or them bringing the car to you. There's a lot that goes to the issue of delivering the car.
Mm.
They need to prepare the car. They need to inspect the car. That's deliver. That's part of the deliver.
Yeah.
There's what they call PDI, pre-delivery inspection. So there is someone who is responsible for that. And there is this thing by it, the 80-point check. There is a checklist that person who comes and check if the car is in good condition, it's in good functionality order. In terms of the engine, it starts, the lights are working. That is the 80-point check. There is a checklist.
Mm-hmm.
Yeah, 80 points. That checks on, okay, it starts, the lights are working, the handles are in good order. They check for those things. Ne? That's part of the delivery. That person needs to be paid.
Mm.
Then there is also the car wash. They need to wash the car, change the tires. That's part of the delivery.
Mm-hmm.
But now, here is my concern. My understanding tells me that the delivery starts from 3.5. Then why are you charging other clients 9,000 for delivery? What is it that you are paying for that 9,000? Now I'll ask my client to ask for the invoices of those delivery. What did you pay with that 9,000? Why I'm asking this? It's because you buy a car from that dealership, they charge you 4,000. Then I come 2 months later, they charge me 9,000 for the very same car from that very same dealership. So something is off there. Something is off.
Wouldn't that maybe be because of um the salesperson on their own, maybe trying to push like large figures, maybe they actually get some
That's the
incentives
case.
from that?
That's the case. 100% correct.
That's how
You
it
are
works.
100% correct. Yes. That is why you don't have to accept crazy amount on the issue of delivery.
So, like for
Delivery.
example, when I'm down
Mm.
now, because of you are someone who's actually in that business where
Yes.
you do a lot of consultations and
Yes.
actually like
Mm.
assist a lot of people to actually get some great deals or
Yes.
some much more less expensive deals. If
Yeah.
like people that are watching us at home, they actually want to get in contact with you,
Mm.
how do they get in contact with you? And when you don't use the very same methodology of the salespeople.
Yes. Uh, they can check me on TikTok. I have a lot of content for them on TikTok. On TikTok, I'm Rudzani Mudau.
Mm.
And then my cell phone number, if you want to text me on WhatsApp, is 072 So now what I will do, my man, now I will help you to understand the podium. There is this document that they sent you that the bank has approved. It shows the issue of interest rate, monthly installment, the balloon payment. We haven't even touched the issue of balloon payment,
Yeah, but
but
that one we
we'll
can
save it
actually maybe do
for
it
the
on
next
our
yeah,
next
yeah.
episode. Like we're going to actually be discussing
Mm.
some really financial
Mm.
education stuff
Education,
that is
yes.
going to help a lot of people to make like some
Yeah,
good sound financial decisions,
yeah,
especially when it comes to cars. Abumtaulaba, they know a lot about these things. So you need to actually like stay tuned. You need to subscribe on this very same podcast that we are actually trying to establish here so that we can share some more deep insights when it comes to car financing and stuff.
yeah.
So Mdau about this thing the podium,
Yes, the
helping
podium.
people understanding the podium. Yeah.
Yeah, now what I do, I'll help you save yourself from paying 150 or 200 for 6 years, and I'll charge you less instead of paying
Like
that
if you're saying
150.
you're going to help me pay 150 less for 6 years, is that calculated annually or for the entire 6 years?
For the entire 6 years.
Okay, yeah.
Remember, now I can assist you to remove 3,000 no say away kayo.
Mm.
And that 3,000, remember, it was going to be calculated for 72
So
months
it does
plus
happen
interest.
though.
Yes, now I can help you
No,
remove
I
those
mean like
things.
it does happen like that. Some people actually pay more
Yes,
than what they were supposed to
they
pay.
were supposed to pay because they were overcharged. They don't know how to spot those overcharges. Now I can spot those overcharges and call on your behalf to say, no, remove these things. I
Well,
don't need
no,
these
don't
things.
say that.
I'm telling you for free. That's what I do, my man.
So like these guys, they can actually like put in some extra cost there so that
Yes,
whatever unit that they are selling there becomes expensive.
my man, the more you pay, the more they overcharge you, the more they are making money. That's the dealership, my man. Remember, the dealership work hands in hands with the bank. The dealership at the end of the day will have an invoice to send to the bank. The bank will not ask, Corey, why is this thing added? Why is this thing added? No,
They'll just
pay.
finance it.
No, they'll just finance it. That's how the dealership makes money. So now I help you, Corey. That is why this other guy told me, what you are doing is great. Because you are saving someone from making a bad financial decision to a good financial decision. Instead of paying that 600 for the next 72 months, now I help you not to pay that 600.
Mm.
That is added on your monthly installment.
Mm.
Yes, I can reduce your monthly installment by that 200 that you are supposed to pay for 72 months.
Now, teach us here about the difference in prime lending interest rate and repo
And
rate.
the repo rate.
Yeah.
On that note, the repo rate ke interest e leng gore e charge ke the reserve bank.
Mm-hmm.
E charge all the commercial banks, your Capitec, ABSA, Nedbank, whatsoever.
And it's a standard interest rate for all of those
Yes,
banks.
for all those banks. And then after the bank has borrowed money from the reserve bank, they charge them the repo rate. I think it's 3 point something. Then after that, the bank will add some interest to that repo rate.
Which might take it maybe to 10,
Yeah, 10.5 is now sitting
10,
at 10.5 is the prime
10.5%.
lending rate,
Yeah, yeah.
which means when you go for the loan to those commercial banks, the negotiations start from 10.5, which is determined by your credit profile.
So I cannot negotiate something less than that.
You
Start
can,
from
if you have a good
credit
credit
score.
profile. Nowadays, there's this thing, young professional account, but it is limited to certain qualification. Young professional account key, but they have degrees in certain career opportunities, engineering, law, medicine.
Does that look like a bracket of whatever that person is earning?
Not really. If you have a degree, you are less than 35 in that field, you
Oh, I see.
qualify
I see.
for
I
young
see.
professional account, which is a private bank.
Mm.
So when you buy a car, when you buy a house, so it gives you a lower interest rate, which means it's prime minus. It's
Mm-hmm, mm-hmm.
10.5 minus something, minus, depending on the credit profile.
Now explain to maybe someone who's there at home the difference on the prime minus and the prime plus.
Okay, when you go for a loan, the negotiations start from 10.5.
Mm-hmm.
It's the repo rate plus the prime lending
Prime
rate,
lending rate,
which
yes.
is the interest that the bank has added to that repo rate
Mm-hmm.
to sit at prime lending rate of 10.5.
Yeah, yeah, yeah.
So depending on your credit profile, if your credit profile is bad, they will overcharge you. If your credit profile is good, they won't add more on prime lending rate. They will add 2 or 1. But if it's bad, they will add 5, 7 or 9.
Mm-hmm, mm-hmm.
That is why also we need to also tackle the issue of personal loan. We'll dwell on that on our next
Some other
episode.
time, yeah.
Yeah, because
Now,
there is someone who has bought the car with a personal loan instead of vehicle finance. There is a difference,
a huge
a
difference
huge
on that one.
difference. There is a
On
huge
that one, on
difference.
a huge difference on
So
that one.
we'll talk about it on the next episode.
Yeah, and I think that one I'm going to enjoy very much. But but now there's
Mm,
something that you said here. I'm trying to collect um, the trail of my thoughts. I think it was when we were discussing interest rate. Yes.
mm,
Now, how do you? But here I'm feeling like I'm going to actually like give people your script, man. Because if I wanted us to talk, how do you negotiate interest rate? But if you do that, these people won't come to you, bruh. They will negotiate on
on
themselves.
themselves. No, it's fine. I can also teach them on how to negotiate for good interest rate. At the end of the day, it goes down to the issue of your credit profile. Credit profile, good people. Credit profile. It's very much important.
Mm-hmm.
Credit profile, it's very much important. Make sure that you pay your debts on time. You don't reach your credit limit. You don't make too many
In actual
applications.
fact, don't actually
Go
don't allow
beyond
yourself to be in a position where you depend
too much
on
on,
credit or on
yes,
loans to
yes,
survive.
yes,
Like for example, the issue I know, like based on different circumstances and situations and where we come from, but you I don't think it's actually wise to actually like go and have a credit card that you use from Woolworths to buy food. You are digging a very
yeah,
deep
yeah,
hole for
yeah,
yourself
a
there.
deep. There is one guy I met told me that is owing a clothing store 17,000.
Imagine.
Imagine, man, a huge
And
debt
those guys, they
financial.
are very smart because of what they do. If like you go and apply for a clothing store account, which is actually good for you when you are actually an entry level employee or someone who has started working, because that helps you build a credit score. But
Yes,
the more you actually pay this thing on time, as you say,
it
and
builds
be
you.
responsible about it, those guys, they can actually send you an SMS to say we have increased your buying power.
Yes,
And
yes,
because of like at that time, you are not actually being rational, you are emotional, and
yes.
you have impulsive spending. You go and actually take the apparatus 17,000 for space,
Yeah, una
and
batho
you can
phela like a
actually
baby,
you
man.
can actually get. I can actually go and buy a cap. Yeah, we regular 700 and I buy it 250.
Yeah,
When we are actually changing from spring to winter, the
yeah.
prices go down.
Yeah, the prices go down.
Yee! Manje sesidiskasi izinto eziserious, but another thing though that I would like you maybe to actually like go deeper on is the issue of um um let's just say for example I have a credit card that I've actually maybe applied for,
Mm,
and then maybe I was approved for that credit card for something which let's just say is 100,000.
yeah,
I have not used that 100,000. It's still on my credit card.
yes.
And I go and apply for a vehicle finance. When they are doing affordability check, do they actually consider this amount of money that I have access to, which is 100,000?
As soon as you didn't take the money, it will never affect your credit score anyhow.
But I mean, like in terms of I have a credit card for
Yes.
100,000.
Yes.
I have a credit card for 100,000,
Yes.
and I just haven't actually used that money. But I have a credit card for 100,000. I can decide to use it any other day.
Any other day, okay, sharp.
Yes, I have it.
It doesn't affect your credit profile anyhow because you did not use the money. There is actually no record that shows already how much you have taken, how are you paying for that debt. So there is no record. Remember, we're talking about your record here. Yes. If you have the credit card but you have not used the money, then what's the point?
I was under the assumption of, like, for example, if you have taken a credit card for 100,000, like, for example, if you go and actually page your credit score, it will show to say this person has a credit card for 100,000, but the credit utilization on that credit card is 0%. But this person is a risk because whatever he actually chooses to use on that credit card,
Yeah.
it becomes like, how can I put it? Like, if maybe I'm paying a car for 5,500 and I have a credit card which is actually 100,000, but I haven't used it. That's another financial commitment because of I have access
Yes.
to that 100,000.
Yes.
So it's not like for example, if I go to a bank or I go to apply for a car, as you say, and I have a loan that I have taken for 100,000, my affordability will be based on the loan that I have,
Yes.
because of it's part of my financial commitments.
Yes,
I have
that's
to pay
good.
this loan each and every month.
Every month.
But now I have a credit card that I have not used. No, we will actually.
No, we'll talk.
Yeah,
We'll still
yeah, yeah.
have
We'll actually
yeah.
discuss this more in detail on our next episode. Otherwise, for me, from my side, thank you very much, guys. Keep on.
Kezo.